Good afternoon, everyone. Thanks so much for joining us today. Apologies for being a few minutes late. We had people coming in and a little technical challenge, but here we are now. Carissa, you can just let people come in as they continue to sign in. So good afternoon. My name is Ingrid Jarrett, and I am President and CEO of the BC Hotel Association. And with me today, I have Mike McLeod, who is our Director of Member and Business Development. And we have Grant Oster, who is here, and he will be actually presenting. And Grant really manages our hospitality insurance program for our hotel community across Canada and is our partner with Western Financial Group. And Grant, I just want to extend a warm welcome and thank you very much for being here with us today. We have received quite a few questions, which we will attempt to answer at the end. We have about a presentation of about 35 or 40 minutes, and then we'll have a Q&A. Just from a little bit of how the whole thing will work, Grant will go through the slides. Many of the questions will be answered within the slides that Grant presents to us today. And there is a chat function at the bottom of your screen. Should you have questions that you'd like us to answer, please go down to the bottom of the screen, put your chat function in, and then we will direct those to Grant for an answer. This is being recorded. It will be available after the webinar, both through a distribution of our communique, but it also will be on our website along with the other webinars that we've hosted. So thank you again for being here today. Without further ado, Grant, let me send that over to you. It's you're up.
Thank you very much, Ingrid, and I'm very pleased to be here today. Hopefully I can make this as interactive as possible. I'm here today to give you an overview of the insurance marketplace to give you some sense of understanding of where the market is, how did we get here, what are we doing with the program to help the situation out, and where do we see this moving into the future. So from a historic standpoint, Western Financial Group and myself, I've been president and working with through HE Insurance and Risk Services and now Western Financial Group for the past 25 years. I was initially part of the process of implementing this program on an across Canada basis, and also the implementation within the province of British Columbia. So, and worked with people like Ingrid and others to bring this program to members. So we're definitely committed on a cross Canada basis to the hospitality industries, to hoteliers, to pubs, to your industry, to do the best we can to source the best possible products, pricing, and create a sustainable and long-term program that will be there to benefit members into the future. And that is really what our organization specializes in. We work with groups and associations like yours across Canada, as Ingrid mentioned, not only in hospitality, but in other areas to help build programs that provide members with the benefit of strength in numbers and a program that is strong on risk management, loss prevention, and service, of course, as staples to how we deliver the product and our partnership with you and your association. So thank you very much for that. And again, I'm really pleased to be here today to provide you with an overview and answer questions that you have. So I have gone over that slide just a little bit. I think it's important to discuss now the insurance marketplace, where we come from, how did we get here, and basically starting last year, we saw a hardening marketplace, and what that means is that the rate that you had to pay per $100 of property coverage was starting to increase, and that was starting to increase simply because The insurers make money one of two ways, and I think it's important to understand this to give you a better idea of the current marketplace and how we landed here as well. And that is, they make it through underwriting profit, and what underwriting profit is simply a component of how much money do they take in premium, and what do they have to pay out in claims, and of course their own internal expenses. So when claims are higher than premiums, that means there's an underwriting deficit. Now that can be addressed in what we call a softer marketplace, and that's when investment income is really good. So the stock market, the equities, the bond yields, so they can take the existing premiums and volume that they have, invest them in the marketplace, and make up for any shortfalls that may occur from an underwriting profitability perspective. So, you know, when we started the hospitality program in 2004, we were coming out or in the middle of a hard market. It was different than this hard market, though, because right now what we're seeing and what we're facing is a challenge on the property side of things, so insuring the property and not the liability. In 2004, 2005, it was a host liquor or a liquor liability situation that was creating the issues, and obtaining coverage for things like forcible ejection, host liquor liability was a significant challenge. And that was really where the rate was being driven up, but also there was an inability to obtain that coverage. So we are in a similar state, but just different because now we're relating to property. So we started or ended last year and started this year in what we would call as a harder market where rates needed to increase. And we saw that on this program as well, where the amount of claims that were being paid out far exceeded the premium that was being taken in. But in the past, that was partially offset because insurers could make that money up in an investment way in the marketplace, in equities or bond yields or wherever they had their capital. So you fast forward now to 2020 and COVID hits. And what happened with COVID was the dollar you had invested, you know, at the start of the year, when March 1 hit, that dollar now became 60 cents. So your ability to have reserves, your ability to underwrite, your ability to provide capacity to insure in the marketplace was now diluted because, again, the dollar you had invested was now 60 cents. So what that meant was insurers had to move to a flight of quality. So again, going to those risks within the marketplace that they viewed to have the best claims experience and the lowest loss ratios. What it also meant was less capacity because insurers are governed by OSFI, the Office Superintendent of Financial Institutions, and they have ratios that they need to adhere to. So, for example, the amount of capital an insurer has, which is impacted by their investments, versus the amount of underwriting or insured risks that they have. So, you know, when you look at it and you say, okay, we had a hard market, now you put COVID into the mix, and that has now even made it more difficult, higher pressure to increase rates, less capacity, and less insurers that are actually even willing to look at hospitality and other market segments, which I think is important to point out. And then the third component that I would throw into the mix that we've seen in the first, you know, we saw in the first half within Canada anyways, is a higher loss frequency on weather-related catastrophic events. So those are things like flood, hail, fire, wildfires. They're all increasing and an increasing trend in Canada. So what that means is that insurers that insure these catastrophic or that protect through the policies they're written catastrophic losses relating to flood, earthquake, wildfire, go to the reinsurance marketplace to access capacity to make sure that those events are covered from a reinsurance perspective. So it's an insurer for an insurer to help them mitigate the losses, or not mitigate, but to cover the losses that occur within these areas. So as Canada started to see an increased frequency in catastrophic weather-related events, flood, earthquake, fire, the cost to insurers to purchase the reinsurance has gone up significantly, and the capacity of these reinsurers to provide that coverage is also limited. So when you throw in the current market environment of, moving into a hardening marketplace of requirement to increase base rate, the COVID factor of reduced investment income, and a significant reduction in the amount of capital that insurers have, and then the emerging trend of increasing weather-related events leading to increased costs and capacity restrictions with reinsurers has led us to the perfect storm that we've witnessed thus far in 2020, not only for hospitality and the two portions, or the two programs we have tied, being the beverage component and the lodging, but also all sectors in Canada have really felt the impact and pressure of increasing rate, limited capacity, and an inability in some cases to even get coverage. So we worked extremely hard over the past year to solidify coverage. We went across Canada, Europe, every possible area we could go to access insurers that were willing to underwrite the program, to continue with the program, and to build a strategy to make it palatable for those insurers to participate, and to look to the future to say, how do we get the program back on solid footing? How do we continue to support the hospitality industry that we're so committed to, and we want to help and do our best? So that led us down the path where we are today, to look at risk mitigation strategy. So risk management, loss prevention becoming increasingly important. Looking at building, construction codes. We know that significant losses are coming from water-related losses, bursting pipes and things. So shut-off valves, construction codes relating to new properties being built. Looking at the new mapping of flood zones. So they categorize these in 1 in 20, 1 in 50-year flood zones. So that means that flood occurs once every 20 years or 1 in 50 years. So looking at that, to helping, business owners that are looking to open up new locations, where should they be looking? How can they make sure coverage is going to be available? And then other things, like I've been personally working with the Insurance Bureau of Canada, and many of you in BC are familiar with this because there's new strata and condo corp legislation that's out there. And we're actively working with the Insurance Bureau of Canada to do the same for the hospitality sector, and really pulling all stakeholders in, being ourselves, the insurers, working with IBC, and of course, your association working with government to try and do our best through a very difficult process to help out members, and those to obtain the best possible coverage. We have seen, obviously, a situation where not all members are able to continue on the program, and we were faced with a very, very difficult challenge to say, how do we make sure that the program and the long-term viability of this continues, and we help out as many members as possible? Meaning, though, that and it could be for a short-term period, while we look to outsource your coverage to other insurers and go through strategies to reduce your losses, to hopefully one day bring you back to the program. But we had to implement policy and different guidelines that made it palatable for insurers to continue to even consider staying on the program, which we were successful with, and calls are going out right now to to those that have the opportunity to remain on the program and obtain coverage. The marketplace is simply very, very difficult right now, but that doesn't mean that those that are not capable of staying on the program, we are continuing to look for every possible option that we can, going to the MGAs, going to other marketplaces, and doing everything within our power to find something for you. And we are committed to that. We are committed to the hospitality industry and doing our absolute best to find some kind of solution for members. So that is critically important and something that we're committed to and will remain committed to going forward. I'm not going to touch, I don't think, Ingrid, at this point on employee benefits. I probably would ask that, there's likely a lot of questions out there. I think I've provided an overview of the insurance marketplace as a whole. We understand where the program's at right now. It has been successfully renewed. There are some that unfortunately can't continue at this particular time with the program, but there is a program available for hoteliers across Canada. And of course, we're absolutely committed to working with those that we could not keep on the program, find alternatives. So I know there has to be a lot of questions out there. It's a very frustrating time for everybody, including our office. But we are committed to doing all we can to provide you with the information, transparency on what has occurred and what we want to do going forward, working with Ingrid and your board and all the other provincial associations to do the absolute best we can for the hospitality industry.
Thank you, Grant.
No problem.
I think, Mike, to get us started off here, I think that there's going to be lots of questions. You have the series of questions that have already been submitted. Would you like to?
I do.
Would you like?
And just a reminder to everybody, please use the chat function, and we'll get to as many questions as we can in the remaining time. Grant, I think maybe if we start off with a question about government assistance. This came up several times. What is the government doing? Is there anything the government can do to intervene? Maybe you could address that.
Yeah, the very first, I think that's a great question. And I think it's critically important that associations like yours or the Alberta Hotel Lodging Association and all the provincial associations we work with, we stick together because there is strength in numbers. And for example, I have been working with the Insurance Bureau of Canada. And the Insurance Bureau of Canada has been working with government. I know that the provincial associations have been keeping government up to date in regards of what's going on. I think there's two strategies long-term that we need to continue to work with government with, and that is the thought of, catastrophic relief coverage for flood and earthquake. Looking at construction codes of, I mentioned strata, but hotels in there as well, of water-related kinds of mitigation strategies, shut-off valves, and things like that would lessen the exposure to water. I mean, we need to look at all these strategies, and we need to source all of these areas together, whether it be the Insurance Bureau of Canada, government, our associations, our builders, construction codes. The solution is going to come from all of us working together to find these answers, because insurance now is gotten to the point where it is extremely expensive, and we need to find a way to control that.
Great, thanks, Grant. Again, from the submitted questions earlier, this one's specifically about COVID. How are insurance companies responding to liability if someone testing positive or catching COVID as a presumed fault of a hotel? Yeah,
so there would be, now there's two components to this. There's the business interruption, which everyone's talked about, where if you're closed down by civil authority because there's a COVID outbreak, as we know, this has been already tested in the courts, and it continues to be tested in the courts. So, I mean, I can't give a definitive answer, but as of right now, there is no response, and business interruption policies from the feedback that I've been provided weren't designed to cover pandemic or COVID. There is an infectious disease condition within the policy, the previous policy, that if it was directly caused by an employee of the hotel that caused an outbreak, there was some limited form of coverage. It has not been tested, but that is a very specific situation and different from closure from civil authority saying there's an outbreak, we're in code red, you have to close your facility.
Grant, we have a question here in the chat. Could we expect deductibles to increase again? Flood went from 10,000 to 25,000.
I think that is the balancing act we always look at to say, how do we keep costs, premiums at a level that is palatable, that still gives us the protection we need. And if we can absorb higher deductibles, I think it is a strategy, at least in the short term, that we all need to consider. I just spoke with your counterparts in Alberta, and I know a lot of the banner hotels are requesting $5 million CGL, or comprehensive general liability coverage. The program comes standard with 2. We've never seen a CGL claim over $1 million. So we need to look at strategies that could potentially, on a short-term basis, find or provide some premium relief. Deductibles and increasing deductibles is one strategy to reduce the premiums paid, and to keep things, in line with what you might be able to afford or not afford. And I do understand it comes at a higher deductible. Sometimes there is no options, and that's what the insurer is requesting. But other times, I think you need to work with your advisor to find the right situation for you and your property that helps you, with your insurance needs, at least for the next year.
Great. Thanks, Grant. Another question from the chat. What safeguards can we implement at our properties and report monthly to insurers to reduce risk?
I think it's following. We have created a risk management at a glance protocol for all hoteliers. If you don't have it, please contact our office. It has things in there like sweep logs, for those that are serving alcohol, protocols to follow, and keeping good notes and good protocols in place. There's also strategies for slip and fall, for fire prevention. All those things are captured in the risk management at a glance. And I would suggest, if you don't have a copy of it, please contact our office and we will definitely send that out to you. It's a very, very comprehensive manual that goes through strategies to reduce the chance of loss. But here's the other thing. If you follow these strategies and they're documented like sweep logs, or when did you clean the washroom and stuff like that, in the event of a claim, we're able to defend. And when we're able to defend, it lessens the impact and the amount of a claim dollar that could go to this program. So we will aggressively defend if we can all follow these strategies and document and be diligent about it. Because if not, we encounter situations like we have right now, where eventually, if you have a 200% loss ratio, your premiums are going to double and triple. That's that unfortunately, that is a reality, and that is why risk management, loss prevention is so critical. We can all go out and buy a policy, and ideally we don't want to use it. And if we don't use it, it means premiums will come down. If we use it too much, it means it's going to go up. And the only mechanism to impact that is strong risk management, loss prevention, from reducing the chances of it, and then helping us defend you in the event of a claim.
Grant, we've had a couple of different questions asked regarding differences in insurance. So we'll take the first one here, but and this is from the chat, but can you address differences in property types. We have a lengthy question here, but essentially the issue is different property types, that the rates seem to be, there's a discrepancy in the rates based on the type of property it is. And then there's a follow-up questions regarding residences.
Yeah, that's a very good question. And for those that were on the program going back, I mean, the program started in 2002, but going back in time, it was one singular program. So the first step in what we realized is that there was more of I would say, a pub or retail liquor component, and then there was the true hoteliers with rooms. So we branched those two programs off, and there is two programs that operate right now, one for more of your pubs and one for more of your true lodging. So there's purity in the risk category and market segments. The other thing I'll tell you is that every property, regardless of which program you're on, is rated individually according to the risks that are present. So for example, you may have a concrete structure versus a frame structure. So a concrete structure is going to pay less rate per 100 than a frame structure. It could be, how close are you to a fire hydrant? Are you in an earthquake zone or are you in a flood zone? So we put all this information into our rating system to spit out a number that's fair and equitable. Now there are situations where we've encountered, market conditions where, maybe the rating was not reflective of the risk. And so over time, we eventually bring everybody to that fair and equitable rating structure. Sometimes it doesn't happen overnight, but we want it to be fair and equitable to all members that participate, so that everyone pays their fair share based upon the risks that they represent.
And a follow-up, Grant, in regards to properties that are stratified or include a residence, and maybe you could speak to some of the unique situations there.
Yeah, so on the program this year, there's what we call employee residences that for the most part, we're, in addition to the pure lodging or the core property, we were able to keep on. The secondary or non-core properties, we were forced to go to the outside market outside of the program to obtain coverage. So we are actively pursuing that right now. Some, and a good majority for, we have found coverage for. Some we have, let's say 50% of the capacity filled and have a little ways to go. But again, we're sourcing every possible insurer from, Canada to Europe to Lloyd's, wherever we need to go to obtain that coverage and do our absolute best to solidify that prior to December 1st.
And again, just on the strata piece, Grant, a little bit more direct. Are hotels being penalized for being a strata as opposed to a standard hotel?
Not that I'm aware of, no.
Okay. Just remind everyone, please use the chat function. We'll look at the submitted questions.
Grant, maybe you could speak a little bit to the preventative maintenance plans and the conversation we've been having to ensure that we can provide the tools to support operators to understand the importance of preventative maintenance, and especially as it is referred to water damage, which is the single most common claim. I think that those kind of tools between now and, renewal date next year is going to be really important over time while this market softens.
Yeah, I think this program has lasted as long as it has when others have failed is because it has a very strong risk management loss prevention component. That's not just, hearsay, it's actually acted upon. And we're in a situation now where we need everybody to take this to heart because it is our only mechanism right now to control what we're going to pay into the future, in addition to obviously our strength in numbers and working together to go to the marketplace. But ultimately, the reflection of the claims of this group is going to determine how hard we can negotiate with insurers and how many insurers are going to be interested in underwriting this program moving forward. So, you're absolutely right, Ingrid. So like simple things like shutoff valves or, water sensors. If your hotel's not occupied and you're in a colder climate, you got to make sure that you don't shut off the heat to a wing, because we see burst pipes come from, simple things like that all the time. So we are constantly reminding properties to do these things and to do our absolute best to adhere to strategies that are aligned to prevent water damage from occurring. We're also, I think, we need to take a strong position to say on new construction, we need to look at, different strategies that says, if you're in a hotel and you have a burst pipe somewhere, is there a code that we could implement that would limit the damage? Is there some type of shutoff valve that can be created? And we need to look at existing hotels and say, what can we do there? And I think there are some strategies. I just mentioned, I gave one example, but we are going to continue to look at that. We've purchased technology that allows us to, go into hotels to do infrared scans to determine, are there also heat spots related to fire? So, behind the walls, what's there? Is there a frayed electrical wire, or is there a hot spot running through a certain part of the wall? So we can find these things. And that's why when we come out and do the reviews, it's not to the risk management reviews, that is by our risk analysts. It's not to, find fault in your properties. It's to help us. It's to help you to look at things, just to give us the chance to mitigate losses, to lessen the chance of these losses, and to work together to truly implement risk management strategies that are going to reduce losses. Because if we keep claiming and claims keep escalating, it's just going to lead to one thing, and that is increased costs for everybody. There's no way to escape that.
Great, Grant. Communication, as they say, is a two-way street. In the submitted questions, we had a lot of commentary and questions regarding perhaps surprise at rate increases, things that maybe hotels were not seeing this coming, those types of things. How would you address that? What would be some best practices that both Western Financial and our insurance group could undertake in these coming months ahead?
Yeah, so we've gone through, several program renewals in addition to obviously hospitality. So on this particular one, we tried to get out early. So, I think it was 45 or 60 days in advance, providing letters to everybody of the conditions of the marketplace. Personally, we created a task force with all the provincial presidents. So I was trying to provide updates, and of course our people are always available. I think into the future, having these types of sessions on a more regular basis, which I'm committed to participating in and being active. So whether it be on a quarterly basis or monthly, as I mentioned before, our company and me personally, being here from the start of this program, I'm invested, and we are invested in the hospitality industry and making sure that we do all we can so that members are well advised and that we face these struggles together and we find ways to address and improve the situation that is beneficial for all hospitality across the country. So I think you're right. Communicate. You can never have enough communication. We definitely, wanted to get out there early. I think it was 45 days before letters were sent. When it comes to negotiating final terms and working with insurers, sometimes it takes longer than it should. And that is just because if you push too hard too early, you don't usually obtain the best possible terms that you can. And so sometimes negotiations require a deadline, which is the renewal date, unfortunately, but that gives us the best opportunity to do the absolute best for you and your members.
Great. We do have a few more questions coming through the chat, and I would invite anyone else that does have a question. We do have a few more minutes here with Grant. And we do have a couple here from the field. It looks strongly that we will have to operate without insurance starting December 1st. Would you recommend operating without insurance? And then there's a second part about what do you expect banks may do with their clients that operate without insurance?
Yeah, I think you need to look at, do you have a mortgage? Who are your lost payees? Typically, they require some level of insurance. If you're having difficulty, I would suggest that you work with our office to perhaps have, a simple liability policy, and you move the kind of policy you have that you're insuring from, let's say, replacement cost to actual cash value. Take a really high deductible. So again, we're here to work with you to try and get you coverage to get you through this year. And to still maintain a level of coverage to adhere to, your standard mortgage clauses and your banking, where you bank their requirements, or it could be other lost payees. So whatever we can do to help, we're here to help you. And we know it's a very, very tough situation. It's a perfect storm of events that have hit your industry. But, we've been here since the early 2000s, and we are going to support you to the best of our capabilities through this process. And if it means reducing cost or taking a bare bones kind of policy, we will do our best to find something that could be right for you. I think going without insurance at all is a very, very, very difficult thing to do for the purposes that I just mentioned, not to mention loss and what would occur after that loss. Again, especially if there's mortgages, lost payees, and things like that. I don't know what the banks are going to do specifically. They do have an insurable interest if you do hold a mortgage or loan. So it's possible, I guess they could call it in. I can't really speak for them, but I can say that we are here to do all we can to help you to find something that is affordable for you.
Grant, another question here. You've spoken to sort of overarching risks that are out there in the marketplace. Are hotels able to access what the particular risk factors are affecting their hotel?
Yeah, I think in a general way, what we touched on, so Ingrid mentioned water loss, so pipes. When we look at, hotels and condo corps and anything really high-rise related, bursting pipes, water damage makes up a significant portion of these claims. So we know that is a risk factor we have. That, pardon me, is significant. You also have other factors like liquor liability or host liquor liability if you serve alcohol. If you have a water slide, you have the potential there for, bodily injury. So it really depends on your particular establishment, the scope of your services, and the risk you face. The good news is, our risk management at a glance manual goes over risk mitigation strategies for all these occupancies and the best in class processes to follow. Should an event occur, we are able to then help you to defend the potential for that loss, in addition to, in the first hand, reducing the chance of it occurring in the first place.
Great, thanks, Grant. A couple of questions here regarding just when will notices of actual rates be sent out? So in other words, when are we getting the new rates? So
there's, as of this morning, we had 143 properties that we were actively calling. There was another 250 or so that we received this afternoon. So we expect the remainder of pricing to be known by this week. And we will be calling, our people are calling night and day, 7 days a week. And by all means, feel free to call our office as well.
Terrific. Thank you, Grant. A couple more minutes here with Grant. If there are any other questions, please submit them through the chat. Grant, was there anything else maybe that you wanted to cover that you have not had a chance to yet?
I think, just that obviously our commitment level to your association, the work that you guys have done with Ingrid is outstanding. And we're here to support that. So whatever we can do to help, we're definitely on the same team. And the strength that we have as the Hospitality Insurance Program of Canada and all the provincial associations together is significant. So I think this is a time where collectively, if we can stick together and come together to address this very difficult situation, it will yield the best result.
Terrific. And are you able to reiterate the best way to contact your office?
1-800-665-8990. And you will all have your own individual insurance advisor. But if not, there's a menu which you can select at that point. But you should all be familiar with your advisor. For those properties that are stuck and can't, that aren't on our program and can't find coverage, please feel free to contact us. We're here to help everybody that we can. We know that, again, there's some that can't continue with the program and some that may not qualify, but that doesn't mean that we can't access outside sources beyond the program and do our absolute best to help everybody.
Grant, there's two questions here. One is, I'll just read it out to you. So hotels' premiums are affected by various risks, i.e. concrete or frame, or in a floodplain or not. Are we able to see what risk factors are affecting our own hotel?
Absolutely, yeah, absolutely. Because what happens, I'm sure everyone's gone through the insurance application process, and the reason why we ask the kind of questions that we do ask, and we also do a full business building evaluation and profits form, which is your business interruption worksheet, is because we need to assess the risk that goes into the rating matrix to produce a rate that you need to pay. So absolutely, your insurance advisor can walk you through that and address those risks that you face and how rating is established for your particular property.
Excellent. I think we've gone through the questions that are in the chat. We'll maybe give another minute here for just one, if there's any very last minute questions here, and then we'll sign off.
We'll just reiterate that afterwards, those people that are on the webinar with us today, the contact information in the slide deck will be sent. So you'll
absolutely.
You'll have the ability there.
And we're here to help. So please, again, feel free to reach out to us. Our people are actively calling right now, members across Canada, but please feel free to reach out as well, either through email or by phone.
Grant, if I may just take a moment, we've heard from hotels all around the province of all different configurations and all across the country as we have our calls every week on an update. And, there's a lot of misunderstanding between a company like Western Financial and our pooled program and whether or not it's you or it's actual underwriters and the amount of work that your team has had to do looking internationally and all over for underwriters that would actually underwrite the policy given our past track record. And so many of those things are beyond our control, sort of floods and fires. And, there's just been this sequence of dreadful situations that actually affect the market overall. And I think the important thing is understanding when you're terming a hardening of the market, it's a result of those things that are really beyond the industry's control, but the underwriters look at it overall. And so the impact currently is, you know, those things that we now can look at some of those key pieces. And, you know, this is something you and I talk about all the time, is that toolkit for maintenance people and operators and hotels to make sure that you put within an operations all of those key different tasks that you can do that mitigate risk.
Absolutely.
And you know, it's all about, at this point, mitigating risk. So this year and next year, we can get to a point where the market is once again softening and it'll be more competitive. And when it's more competitive, we're having a very different conversation than the one that we're having today.
I think so, and you nailed it. So sustainability requires stability in claimings, trends, and claiming patterns. So together, if there's one thing we've learned through this process in history, is that we need to control losses. And just because a soft market hits and we're able to get cheaper rates, those rates may not be sustainable into the future to pay losses if we don't control those losses. And we'll find ourselves right back in the same spot we're in right now, unfortunately. So risk mitigation, risk strategies, reducing losses is the true long-term solution, and the only way to control what we pay and how much we pay and what type of coverage we can get into in the long run.
Thank you, Grant. Mike, I'm seeing one more question from earlier, and this is a remote guest ranch that's saying they're in a rural area and they pay 3 times more for the same value of property than B&Bs close by. They haven't had any claims in the last 10 years, but still had an increase of 75%, while the B&Bs went up 15%. Can you determine why would that be?
I would need to look at the policy and the specifics of the situation. It doesn't sound right to me. I mean, I would think that shouldn't be the case. I would think there would have to be sometimes, and one of the things that we offer is that if members are considering leaving and taking a different policy, we offer the services of comparing the policies. And sometimes we find there's significant differences both in the level of coverage and the terms and conditions within the policy wordings, which can be quite complex, and sometimes they're not completely reviewed prior to binding coverage. So typically we find a reason for that, and there are times where there is a market, there sometimes is a market out there where on a very short-term basis you can find something that's a little bit cheaper. That does happen, but ultimately what we have found over the years that those that have left the program typically come back, and that is not just for hospitality. That's for, we place programs across the country. We typically see that because on a long-term basis of stability, the program typically provides the best option.
Thank you, Grant. Mike, do you have any more submitted questions from prior to the webinar?
No, just some comments thanking Grant for the presentation. So Grant, thank you so much.
Thank you. We really appreciate it. We know firsthand of talking to hoteliers and pubs across the country how difficult it is. We definitely empathize with that, but we're here and we're doing everything we can for you and your members. So thank you very much, and I really appreciate the opportunity to speak and answer some questions today.
Thank you very much, Grant. Our members have certainly reached out to us a lot recently, and of course we're having our conversations weekly for the different provinces across Canada. And I just want to acknowledge the amount of work and commitment that you and your team have. It's not always to the answer that people are looking for, but I'm confident that you're working on our behalf, and we can weather this, especially when we look forward. It's not just a one-year thing. We're in this for the long run. It's been a very successful program. And I would also like to acknowledge that we've had many properties that actually have not been able to renew under different programs that we have been able to secure insurance under this pooled program. So thank you for the commitment to the industry. And should anybody require connection or they have any additional questions, we'll certainly ensure that we connect you. And we will be sending, once again, the slide deck as well as the contact information should you have any questions after the webinar.
Thank you.
Mike, thank you very much for co-hosting and reading all the questions today. And we wish you well. Very difficult times right now in British Columbia. And we continue to get messages around our second wave. And the last thing we need is an insurance program sort of concerns and stress at the same time. So Grant, thank you for making yourself available today. Really appreciate it.
Thank you. And I'm always available. Please feel free to reach out.
Thank you very much.
Thank you.
All the best,
Thank you.
everybody.
Have a good
Take
day.
care.
See you later.